Morning all, how are we doing? Morning, Peter, FTNet, Ian, Julian, no, not Julio, Julian, Yoko, Robert, Novelty, JC, Danny, Kennelly, smash the like button, hit the like button, 30 people, hit the like button. Morning Joe, Mark, Amy, Mark, liked, Whipping Post, morning, been a busy morning, yeah, we've had lots of movement this morning, yeah, lots of stuff going on this morning. Market seems to actually have woken up. Finally. It's only taken 17 days for the market to actually go, oh yeah, we should be moving up and down, shouldn't we? Finally. Morning Baggy, morning Virginia, day trader, Gregors. Excuse me. I'm coughing in the microphone. Still can't get rid of this cough. So yeah. Couple of ADRs hit, weekly ranges hit already. This is the first time probably since the beginning of December, we've actually had weekly ranges hit on a Wednesday. So we've actually got movement for the first time in ages, which is great. Not in the direction I want it to go, but it doesn't matter. As long as it goes somewhere, I can get out at some point. So it's moving, which is nice. So nothing banked so far this week. Couldn't bank on Monday because nothing had gone anywhere. Yesterday we did start some moves, which basically took some of the positions into drawdown, and obviously we're moving a bit further today. So nice lot of risk on now, which is good. So just need to basically wait for some of the profit take moves to get underway. ADR reversals, I banked 0.22 yesterday. Euro CAD has got a good chance of hitting today. We've just had some Euro news come through as well, which I'll look at in a minute. So TP on that for me is up at the highs. Nothing else to bank there. Hedging, banked 0.76 yesterday. Nothing to bank at the moment there either. And only one hedge on the pound CAD. Two reversal alerts very, very close together. So very small hedge locked in. $6 hedge locked in. Oh dear. So we need to look at what's going on with these pound and everything. I'll just quickly recap yesterday's US session. So the US session yesterday, tiny profit. Struggling with the indices this week at the moment. Up 6% on the month on the US, but NASDAQ yesterday, we hedged across all three instruments yesterday. Really whippy open, no volume. So got out of the hedge longs on the NASDAQ at the previous day's high, which worked out perfectly. So we pushed up just beyond the previous day's high, triggered the aggressive exit, and got out nicely on that. There was a lot more movement on it if you had the balls to hold it. Dow, same thing, whippy open. It was just a massive whipsaw candle at the open. Huge whipsaw. Then it pushed down, pushed up, didn't go anywhere for ages. And then it pushed down and it looked like it was double bottoming here. So I took that W exit on the shorts and then it collapsed down. The aggressive entry did not get in until it hit the previous low. And then it bounced off and I got the exit there. And FTSE couldn't get out of. This is if you want an example of a rotation day, this is probably one of the best examples of a rotation day. Rotation day is basically when the market has no bias, long or short. There is equilibrium between buyers and sellers. You've got fairly equal numbers of buyers and sellers in the stocks within the index. And all you do is you get waves of movement, rotation. So basically the market goes into a rotation. It goes up and down and up and down and up and down, and it doesn't go anywhere. Yeah, rotation day is very, very, very difficult to trade because by the time you've identified you're in a rotation day, the rotation day is finished. So hard to trade. Not a lot you can do with it. So overall, not a bad day, not a good day. Just waiting for a big explosive move day, which may be today. We've got 4 minutes to the open. Excuse me. Not a good day on the. Oh no, yeah, no, I did. Yeah, no, yesterday was okay. It was the day before that wasn't particularly good. So up 4% there. So I'm up 10% on the indices so far. So it's still looking like a 20% month, but it's a struggle at the moment. So today we've sold off quite hard on the DAX. We've sold off incredibly hard on the FTSE because we've had that CPI news on the pound. So the pound CPI figures were released this morning. We'll just quickly cover the news before the open. That was a 4. We were expecting a drop. This is not good. So confusion in the market. We were expecting the market to have a bounce. But for some reason, the economists had factored in a drop again. And we've now got that bounce. So we were at 3.9. We were expecting the annual to drop by 0.1%. It's gone up by 0.1%. So CPI basically means that the pressure, what we were expecting this morning was an announcement of, yeah, it looks like we can definitely drop those interest rates. And now that inflation has gone up, it'll be a case of not at the moment. So in theory, this should be not really bullish for the pound. It's more of a neutral for the pound. It means that we're not going to put interest rates down as fast, potentially. But again, it's all data driven. This changes month on month. This is why we pay attention to it every month. So at the moment, I would say that is a kind of neutral to slightly bullish stance on the pound. As you can see by the pound, the market agrees. Pound has risen. So it's a bullish news event for the pound. However, it isn't anything we weren't necessarily expecting, and it shouldn't really be long-term strength in the pound. It doesn't mean we're going to put the interest rates up. It just means we've had 0.1 percentile bounce on the year. Nothing really, is it? So this is a knee-jerk reaction. I think we'll probably get some sustained strength on the pound. We'll probably get a decent move on it, but then it will just go back into neutrality again and then obviously drop. So it's just a blip. We're expecting these blips. We've got markets about to open. 40 seconds. We're expecting these blips where, as we can see with the Canadian dollar, the Swiss franc, the euro, and the US dollar, what happens is inflation drops, and then it bounces, then it drops, then it bounces, then it drops on the way down. Yeah. So this is part of the bounce for the pound. So when the website updates, which should be in the next hour, it hasn't already, when that becomes a 4, not yet. This is just part of that process of bouncing down. It doesn't mean inflation is going up. It means it's stable, ever so slightly higher than we thought it was, but we are still going to drop interest rates. The euro have come out this morning and said, we're definitely doing it by the summer. They're going through the same thing. They're ahead of us. They've already had the bounce. Yeah. Yeah, 0.5. Markets open. Oh, that's a tight one on the FTSE today. I was in two minds whether or not to trade the FTSE this morning because we've had a hell of a drop. We're at ADR. The market's already done its movement for the day on the FTSE. So if that pound continues to rally up to ADR today, the FTSE should come down. So I'd much rather be triggered short on this, which it looks like I'm going to be, because there is more chance, I think, of that pound rally happening. But we could get a pullback initially on the pound because we've had a rally, put a leg in up again. So we'll see what happens. But yeah, short on the FTSE. That's a really tight range. I don't like these tight ranges. I really don't like it when it's this tight. I do, because it's really easy to hit target really, really quick, but it's also really easy to get whipsawed, even when it's 10% of ADR. It's just, this is just over 10% of ADR, like just. But we'll see. So yeah, so the bounce is basically happening. So same as the euro. The euro have come out this morning and said, Lagarde has said it's likely the ECB will cut rates by the summer. That's exactly what we were saying. So we will see what happens. So no entries on the DAX, no entries as yet on the DAX anyway. Not a lot of volume coming through on the DAX. Actually, there's not a lot of volume coming through on the FTSE. This is what I was slightly worried about. When you've had a news event pre-market open. We get this with the US when we get the 1:30 news in the US and then the market opens at 2:30. If that news has caused a massive move in the stock market, the open has less volume, obviously, because they've been selling stocks off heavily pre-market. So you don't really get a lot of opening cash balance movement because they've already executed those orders because they know which way the market wants to go. So you tend to get a little bit less volume, and obviously there's chances of when you have less volume there's a lot chance of it being pushed and pulled very quickly and easily with low liquidity, which causes whipsaws. Equally, when you get a large order coming in, if there's low liquidity, you get a fast move as well. So it has its pluses and minuses, but it's always a little riskier when you've had a big move already put in and you've got an ADR hit pre-market. But we will see where we go. Obviously, your ADR, if you haven't got this pre-market data, will be different. So that is where we closed yesterday. So this is actually a gap up scenario. Same with the DAX. DAX has just opened pre-market here. There is a gap up scenario there. So we have got a gap up to fill today. But we'll see. Really no volume today. Quiet as you like. Why do you have so many scaled entries on the Dow yesterday? Why do you have so many scaled entries on the Dow yesterday? Scaled entries? What do you mean by scaled entries? You mean these pending orders? This is what the EA does. This is the aggressive exit. So when we get out of our short entries, the EA then puts a pending order above the last candle high, so that when you get that rally, you get into the rally. Yeah. If the market drops, we cancel the pending order and move the pending down. If it carries on going down, we cancel the pending, move the pending down, carry on going down, carry on going down, carry on going down. This pending order always is above the high by the offset. And then when the market rallies, it gets us into our longs and gets us out on an aggressive exit. Yeah. So this is just the market, the EA going, are we ready to go long yet? No. Now, and what about now? 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 Buyers are in. Excellent. We're on. We're in. That's it. That's the exit. That's the strategy, the aggressive exit strategy. If that's what you mean by scaling. That's just the EA. Just how it works. About to trigger long on the DAX. FTSE's gone very, very much nowhere. We have 17-point open. So it has put some moves in, but not massive, is it? Triggered long on the DAX. Really no volume, is there, today? Right, so while we're waiting for that to wake up, today's news, we have, speaking of news coming out an hour before the market open, we've got retail sales for the US at 1:30 this afternoon. It's day 3 of the Davos meetings. We've got industrial production 15 minutes pre-market, and then we got Lagarde speaking later. Lagarde has just spoken this morning. I'm assuming that is something to do with Davos, but that's your main news today, is the retail sales coming out at 1:30. So just watch your US pairs. The market's looking for any reason to dump that US. So if they come out as negative, we probably get a good move down on the US. But at the moment, the main mover obviously is the pound. Overnight news. This is obviously the CPI figure coming out. But prior to that, there's nothing overnight that's exciting. Some Chinese news. But there's nothing else that has come out overnight that's of any impact whatsoever. Something from the Bank of Japan, survey. So there's your CPI figure, the 4% on a forecast of 3.8. Obviously, the big rally off the pound. Analysts have yet to say anything about whether they think that will move forward or back interest rate rises, or whether it will be unaffected. That will obviously have another impact on the pound, so that could undo that whole move. Lagarde's obviously been speaking, this must be at Davos, this morning, and she's basically said it's likely the ECB will cut rates by the summer. We know that. We were looking at March, April, springtime. So that isn't anything new. It's just a confirmation that, yes, we are doing it. So that's it. That's your news this morning. So that's where we are at the moment. Okay. DAX pulling back inside the range. FTSE's dead. Look, FTSE's died. It's run out of legs. Let's see what the pound's up to. Pound Swiss ADR still rallying, obviously, because we just had an ADR on the pound Swiss. There we go. ADR hit on the pound Swiss, so we're still rallying on pound. Last 15 minutes, just putting a new high in the last. Look at that spread. Jesus. That's massive. So yeah, we're still rallying on this pound, which will put pressure on the FTSE. So as you can see, but really got no legs today, is it? I haven't got to get far to get to target today, so can't really scale out anymore. So on the FTSE, obviously we are back now to the November area. So the rally that we had during Christmas, we're back. Basically, the December rally basically is back into this area of balance. So there are 1 billion points of support in here that it could just hit at any point. It could just bounce absolutely anywhere. So it's impossible really to pick a low on it. We're at ADR. Normally you'd be saying we start to run out of steam on ADR on a normal day, but obviously today's not a normal day because we've had news. So there's TP1, which is just below the low of the month, which is probably why we're stalling out here, because we've got limit orders triggering at last month's low. So the market will be trying to buy up this low. Although obviously now we've had this news event, I suspect they will probably decide actually not a good idea and they'll flip short. So we should get a pop out the lows if we can break this purple line, which is the monthly low. If we get a push through that, we'll probably pop. That'll be TP1 hit, and then it's a case of how far do you want to drop. It's pretty unlimited this morning, so we'll see. FTSE, if that does happen, will probably drag the DAX down with it, so the DAX will get hedged. So we'll have a look at DAX targets to the downside. Oh yeah, it's this double low, isn't it? Yeah, it's this monthly. So that was the November high, December low, which is the December open. So we closed at the high in November, we opened at the low in December and carried on going in this run. So this area here, although it doesn't look significant from a price action perspective, from a technical buying and selling perspective, the market places orders at highs and lows of weeks and months, just because it buys in cycles. So there will be lots of limit orders sitting here, but there is a chance that those limit orders will be in both directions. So it might be a bit of a volatile move there. There you go, hedged on the DAX. So I'm going to move my DAX targets up rather, above that level. So that's 5R, which is 150 ADR. So I'm going to target on the DAX today a 125 ADR move, which is above those highs, or rather the highs and the lows. So that is the area that I'm looking to target. So when we hit there, I'm expecting some kind of price action, whether it bounces off or whether it just bounces and drops. I don't care. What I'm looking for is a bounce to get out on an aggressive exit. So upside targets. Don't know. I'll deal with that if it decides to go long. I actually don't know where to go long at the moment. It's difficult. We're stuck on that on the FTSE as well. Look. Not going anywhere today. This is kind of what I was a bit worried about of this. We'll see. Right, let me just catch up on chat before we look at FX. Morning, Pot Guider. CPI is higher probably because of Christmas. No, this is year-on-year figure. This is the yearly CPI, not month-on-month. And this is inflation. This is the prices we pay, not what we spend. That's retail sales. So it's a different figure. It shouldn't be affected by Christmas. Morning Evil, but who knows? There's a lot of stuff goes into the pot. Could be anything, couldn't it? Already hedged on the FTSE, Amy? Are you? Yeah, I mean, depending on your broker and depending on your offset, you may have been hedged. We went above that pre-market by, I mean, it's not even a pip. So depending on the spread of your broker, you may well have got in a hedge on that. Again, today is a prime example of how backtesting is total rubbish when it comes to this type of strategy. Backtesting on any strategy on a 5-minute time frame is really, 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 really unreliable. There's a company called Strategy Quant, and if you're not aware of them, it's worth checking them out. They're a software provider that does automated strategy development, and they have a course, and in their course they do not recommend you touch any time frame lower than 1 hour, because the results of your backtest will be 5%, whereas it could be 70 to 80% as a probability moving forward on an hourly chart. Yeah, 5-minute time frames are massively affected by spread. The difference between getting to a level there and price moving away and not hitting a target, every broker will give you a different result there. That one trade not only affects the P&L of your account on that one trade, it affects the next entry. If you think about it, most strategies have a single entry. Wait for that trade to play out, exit that trade, set up for the next one. If you exit your trade there and then a new trade sets up here, and someone else doesn't exit their trade there, they won't take that trade. You will, or vice versa. So it has such a massive knock-on effect on any strategy that you test in the backtester on a 5-minute time frame, because everybody's going to get a different result. So it's just the way it is. The only thing you can do is look for patterns, look for robustness on 5-minute time frames, but any results you get are just not going to be the same in the future. And that goes for any strategy, whether it uses a stop loss or not on 5 minutes. It's just unreliable backtesting. Because of that exact reason, Amy is hedged, I'm not. If this drops down now to 2-hour target, happy day for me, not for Amy. Yeah, same strategy, same EA. Could even be the same broker, don't know. But that's the difference in the results, isn't it? We aren't going anywhere today. We are stuck. Proper stuck. Aussie dollar Swiss ADR. We'll have a look at the ADRs in a sec. Long on the Dax by the spread. So many long orders, blue arrows. Yeah, they're not orders, they're pendings. FT I've already explained that, haven't I? 75 watching, 23 likes. 83 watching now. I'm going to check up on you. 24 likes. There's 83 people in here. That means that 3/4 of the room don't like me. I'm not sure if it's having any impact at all, but do it anyway and we'll see. If we can get over 100 people in here, I'll... I was trying to think of something I could do. I don't know. Morning, Neo. Excuse me. My range size is reading 0 on the SAH on the UK 100. Minimum range reads 75. Your range size? I don't know. You seem to have an awful lot of problems with your account, don't you, with this, for some reason, FTNet? I have no idea why. What that means is that the EA did not do the calculation at the open or on the candle close. So whether it's the pre-market or the 5-minute opening range, open cash balance, this is just tapped into my TP for the second time. I'm closing it. I'm just going to take the profit on it because I'm worried about this level holding up and us not breaking through. There's just no volume. I just don't know if there's enough sellers today to actually crack this level. So I'm just going to take the profit on it just in case we do rotation today. I'd rather just put something in the bank because I've got a hedge to deal with. So I'm just taking the profit on that first half of the FTSE at 2R. If it stops me out, it stops me out. If it flows, fine. But not convinced about the price action here. And the other thing that isn't convincing me is the fact that the DAX is pushing back up. We're not going anywhere. So there's not a massive amount of selling volume. There's not a massive amount of volume at all, is there? But yeah, so basically what the way the EA works is at that line, at the 5-minute initial cash balance at 8 a.m. exactly, a calculation is run as soon as this candle closes. On the open of that candle, a calculation is run to work out what should be the pre-market range we're going to trade within these ranges and how big is it. Yeah. So it runs through a line of code and it says, okay, the ADR is this, calculate the minimum and the maximum, and then we'll have a look back through these candles and find out which range here fits within that 73 to 146 level, and we'll use that. As soon as we've got that number, place pending order long, place pending order short, wait, and then store the range size. Actually, just store the range size first, then pending order long, then pending order short. Okay, if you've got that, it means that the next line of code, which is that, didn't execute for some reason. That's not the EA's fault. If your broker, your terminal, or something stopped that line of code executing, and therefore everything else, I guess you haven't got pending orders because those are the lines after. Something is stopping your terminal running. There's a blip somewhere, blip in the matrix or something. But if you've got the minimum and the maximum, it's gone through and it's got that far. Don't know. These things are just impossible to troubleshoot. If you're on DOW and NASDAQ, same broker as me, we can probably rule out the broker, can't we? So it's either your PC or your terminal or your internet connection, someone else. But it's a local thing. It's not something I can. Zero divide. So zero divide is it can't do the calculation. So one thing, there's no reason why it can't do that calculation today, is there? Stopped out on the FTSE on the second half, so banked that tiny profit again today. Yeah, zero divide error basically is it can't do the calculation for some reason. It's missing a part of the equation, if you like. I don't know. Am I still with Robo Forex? Yeah. For FTSE. For Forex. Robo Forex for FTSE. I've switched over to DOW and NASDAQ for the moment for indices, although I am finding it a struggle with margin. So I'm contemplating possibly moving back to Robo, but I want to trade the FTSE, and they haven't got the FTSE on Robo. So I might look for another broker. Might have a look at Axie again. I don't know if Axie have got the FTSE. Yeah, Axie have got the FTSE. I might possibly move back to Axie. I'd need to see. Oh, there you go. Right, yeah. See, I'd need to see what the spreads. See, the spread's too big on foot. They've got a 3-point spread on Axie, as opposed to a 1.5. And when you're talking about this strategy, spread is absolutely critical. So I think that's why I ruled out Axie. No. I hate changing brokers. I just hate it. Hate. Only change I made was fixed amount of money. Okay, so if you've made a change while the thing was running, it's not going to like that. Remove it, shut the chart, new chart, put the EA on, set it up, press a button, let it run. it may be that it can't do that calculation because it's stored a variable previously and you've changed something and now the calculation won't work. That is a possibility, definitely. I can't account for everything that everybody does with every EA. It's just not possible. Stick it on a chart and let it run. Don't touch it. That is quite possible. That's why you got that zero divide, because you've made a change after it's already stored a variable and it hasn't got what it needs for that. Fusion markets, I haven't looked at those. There's loads. Fusion markets are a bit small, but Nirav just popped up on my Facebook. He's promoting his prop firm. Says he is the best. Only one face to pass. I know, he's another criminal. No, he's not a criminal. He's a prop firm owner. Yeah, I know. They're all at it. All at it. I'm starting one up. I'm going to start one up. Called Lee's Prop Firm. I'm going to sell you demo accounts for half the price of everybody else. Why not? I'm not really. Only changing memories. Okay, answered everybody. Right, so let's have a look at FX. So actually, let's first of all do the Dow hedge. So $95 banked on the... It's a horrible thing to say. I was banking $500, $600, $700 on these before Christmas. I've spread my risk very thin across multiple strategies now, and it's hard looking at that because I'm thinking, why did I even bother? But it all adds up. All adds up at the end of the month. So DAX hedge, we're obviously not looking like we're going short. So downside target is very simple. It's these. It's the monthly open and monthly close. It's these two purple lines. We will find liquidity there. Regardless of what happens with that liquidity, we'll get some volatility. So I go prop with you. Yeah, that's fine. But my business model, if I started a prop firm, to let you know, it wouldn't be any different to theirs. Yeah, I would be putting things in place that stop you making money. That's my job. I'm a prop firm moment. My job is to make your life as hard as possible and your strategy fail as much as possible and sell you a demo account. Yeah, I'm not a nice prop firm. I'm a prop firm. They're all the same. They all have the same goals in business. Sell air for $500. Here's 100,000 demo account with a broker. Nothing. Here you go. Have it for $500. Yes, please. That's what we do. So you would be buying my air instead of Nirav's air or Greg Secker's air or the bloke that almost got put in prison's air from my Forex funds. You'd just be buying my air instead. Yeah. You could download a demo account from your broker and do the same thing and monitor using something like the Trade Manager dashboard, whether or not you hit 5% drawdown. You could do that, but that won't cost you any money. The same thing. We all know that, but we all like glittery, shiny things. When someone says you can have 100 grand, we go, ooh, yes, please. Right, DAX, upside. So we are certainly rejecting the downside today. Dangers I can see to the upside are there. Not so much that. So, and obviously we've got that high as well there. So 5R. So 3R to the upside is basically the gap fill. So a 3R target is probably not a bad place to look upside. It's not a bad support area either, if you look. So we've hit that multiple times. We broke it, couldn't get back through. They definitely held price down there, and then we've pushed away. So the next time we get to this area and the gap fill, we're likely to find resistance. So if we do manage to get a rally out today, we'll probably get a pullback if we are going to go long. So that's not a bad area, I think, as a target to the upside. The best area for me would be ADR today, which is here, which is 5R, which is this high. But looking at the volume so far, it's going to take something pretty spectacular to get this thing up to ADR today. So I'm going to go with the gap fill. It's not far enough. I'm going to go with the gap fill. I'm going to look at yesterday's close, basically, which is 3R. I'm going to target that to the upside. So if we go long, I'm going to look for them to come back up and test yesterday's close. It looks like they're wanting to flip short again now, doesn't it, though? Hard one today. Amy, because I deserve it, yes. But I would have a really, really big moral dilemma running a prop firm, knowing full well that 95% of you are going to fail because the restrictions are too tight. And when you do get funded, I'm not actually going to use your money for real trading. And I know that less than 0.5% of you will ever hold the account to payday. And of you, those of you that do, 0.04 of you will actually get through to month 2. I'll be looking at it going, I'm loaded. These guys are all giving me their cash. I would have a moral dilemma doing it. Because I'm a nice guy. I'm not Greg Secker or Nirav. Anyway. So I don't sell you a course. Right, FX. So ADRs today, there's quite a few to look at. So let's start off with the, how many RSIs have we got? Quite a few as well. So let's start off with the Aussie dollar Swiss. So ADR hit to the downside. There's a propulsion gap we're running into here, which is quite an old one. Very old, in fact. Which isn't really even a propulsion gap. It's part of a V-shaped recovery. So we're coming down to test this low here. So this area here is what we're going to test, which falls somewhere between 150 to 200 ADR. So if we get a continuation push down into there, you're going to find limit orders triggering off of that and potentially at 125, 150 ADR. So where we are at the moment, you're just about to get a reversal alert. Yeah. So not a bad entry there, but there is a much better entry a little bit further down. So we are the morons, yes. We're all the morons, aren't we? Because we pay money to everybody else for stuff. But I don't know. I would really just struggle running a prop firm because I don't know. There's some people out there don't give a monkeys, do they? And I guess those are the hard-nosed businessmen that go, oh, I don't give a shit. We're just going to do this. We're going to sell this stuff. And if the idiots want to buy it, let them buy it. Whereas I'm more of a realist. Like, there's a much easier way to make money. If you haven't got money, you need it. If you haven't got money, go and do something else. Don't try and chase the dream because all you're going to do is you're going to lose your money. I made good money in prop. Don't get me wrong. I'm one of the few. Well, not one of the few. Quite a lot of people have made money in prop. But as a percentage, it's lower than people that actually make money in Forex trading because we are just gambling, aren't we? At the end of the day, I have shown you on screen how I trade prop. It's a gamble. I'm gambling with very high risk that you cannot sustain. It's literally just a case of you're lucky or you're not. If you run the SIH EA on there and for an entire week it has clean breaks, you're going to win. If it doesn't, you're not. There's no skill involved. Just luck. And they know that. They know that there is going to be a losing streak. Anyway, we know. I've talked about prop a lot. But I made good money of it. This is one of the reasons I'm trading a lot more money this year because I've used some of my, well, most of my prop earnings from last year to fund another account. I've got another 15k account running now. Paid for by prop. Thank you very much, my Forex funds and E8. But no thanks. Thanks for the money. I'm going to use that now to make my own money rather than giving it to you and then not making the money. Yeah. Way to do it. Aussie dollar Swiss. So potential bounce point there, but better bounce point there. So see if that can push down further. The Swiss franc is linked to the euro. The euro has just had some news. So be aware of that. But that's your first ADR hit. Potential bounce up into that propulsion gap if it's going to continue that run down. So you could get a quick scalp out of that one. Euro pound. So I'm long on this already. I This thing is in the range from hell, and we've basically just on that news with the pound gone from the top of the range to the bottom of the range in one candle, pretty much. So, yeah, big move. So potential long opportunity there. I've already got 2 longs on this one. I'm looking at targeting back up at this propulsion gap, which is that high there. Eventually, we are going to get the pound dropping, but we're also going to get the euro dropping, which is why this thing's been very much sideways. So I'm long at the moment. I will scale in if it continues to drop, but there's an opportunity there for an ADR reversal. You've probably had, you've had a reversal out on the 5-minute, I'd imagine. Oh no, it's dropped fairly hard. It's had a 20-minute drop. So you haven't had a reverse alert. That reverse alert is going to be basically where that long entry is, which I took previously. Pound odd is a 125 ADR, much bigger extension. We just tapped 150. So pound odd, I will probably be getting into, if I'm not already in it. Yeah, I'm getting into the pound odd today. So next reverse alert on 5-minute, I shall be getting in short. Which will be there. That's going to be my entry on the pound odd, unless it obviously pushes up further, then I will get in higher. Pound CAD, euro odd, again, another ADR hit on the euro. What's this euro doing? Let's have a quick look. Yeah, big strong rally on the euro at the moment. Apart from the pound, which is obviously a lot stronger today. A nice strong euro today. So that's euro odd, just hit, literally just hit ADR, tapped into it. Nice tight reversal alert on that. Going to get in there. Pound CAD. That one's just coming off now. Again, that's a 125 hit, so I'll be taking that one short as well, pound CAD. Yeah, I'll be getting into that one as a short as well. There's your reversal. That accumulation, as soon as we break that level. I really think this pound might drop all the way back down to origin. We'll see. But this is a very big overreaction to something that isn't actually that surprising. We were expecting CPI to bounce. They forecast it to go down and it bounced. I'm not sure the market's really gone, holy crap, to this. We were expecting a bounce because we've been forecasting a bounce. Everybody else is bouncing. We know that. We were expecting it. It's not a shock. The fact that we've just done a 100, 125 ADR move to the upside on the fact that we knew something was going to happen, I'm not convinced. So this might well just unravel the entire move and we get an A-shaped recovery on it. Back down to there by the end of the day or tomorrow. Pound Swiss, 100 ADR. There's your reversal there. Nice big move up on the news there. That's your propulsion gap. When this candle closes, you're going to have a whacking great propulsion gap there to come back and fill back into this. If this isn't going to be a move, bullish move for the pound, which I can't see why it should be. And the pound New Zealand, again, all pound. So I'm short on this one already. Yeah, so basically just looking for a exit on this when we get the move back down again. I haven't got Aussie or New Zealand news coming up, have we? Oh, yes, sorry, yeah, we have got Aussie news coming up. So we got Aussie news coming up tomorrow. So if those unemployment rates come down in the Australian, we could get a good move on the New Zealand. So nice ADR reversal opportunity on that one as well. Pound New Zealand. I should really have the dashboard here, shouldn't I? I should move that dashboard over onto the ADR account. That would make sense, wouldn't it? Right, so those are those. We've also got weekly range hits. So just scrolling out. Obviously, this is Monday. So that is your weekly range hit on the pound New Zealand. So 277 is the average weekly range. We've just hit that. It is off of news. I don't think it's a fundamental thing, but you never know. So big strong move there. which potentially can get mean reverted. Same with the pound odd. Ideally, just take one or the other of these two, because as you can see, the pound New Zealand and the pound odd, very, very, very similar pairs, very correlated. So you're doubling your exposure if you get into both, but up to you if you want to do that. The Aussie dollar can move independently on its own news, which we've got coming up tomorrow. So that could do that, and the New Zealand could do that. So there is going to be deviation in them based on news. We've got Euro odd also extended on the hourly, big strong push up there. So that's done 250, 260, 263 off of a 255. So again, big strong push. It's Wednesday. Quite often if we get these big weekly hits by Wednesday and they don't go any further, we get that pullback, midweek reversal as they call it, or some people call it. Aussie dollar, US dollar. Big strong push down there. Just taking second position on that one this morning on the Aussie US. That's a really big move, isn't it? So big strong US dollar move at the moment. We're coming back down into the monthly low from December. Yeah, so that's December's low. We've got this area here, which we basically hit, and we started to buy it up, tested it again, bought it up, came back, bought it up, came back, bought it up, bought it up. Then the news hit. This is the FOMC announcement with the 5.5 rate being the same. Big move. So this is the area the market bought that from. So we'll see if we get a bounce back out of this low. We should get some volatility at the monthly low. We usually do. So potential for a bounce there. Target on this one, I'm just going to move down now because I've got two positions on it. Just going to go for roughly... No real science behind this, apart from the fact that it's this kind of range high, really. It's halfway through that move, and it will equate to, assuming the bounce is there, roughly a 50% retracement on the leg. And obviously it's in profit. So so there you go. There's your weeklies. Monthlies, we've got the pound odd and pound yen has hit its monthly range. Okay. So pound odd, we've already done our monthly range on this. So that's the beginning of the month. That's where the month started, wasn't it? So that is your entire monthly range complete now by 17th of January. So that is what we normally do in a month on the pound odd. So it is going to get to the point where we'll probably start to run out of buyers. It's going to take, I think, some good Australian news really to give this one a kick back down now. And obviously, if this move on the pound is a knee-jerk reaction, we're going to get an A-shaped recovery on it. What we're going to get is the market doing that over the next 24 hours. And then the Australian, if the Australian unemployment rate drops, the Australian will power up. So that will give it the power to really drive this back down again. So it's a good opportunity for a short pound odd there. And the pound yen. So we've got the monthly range hit there. I'm obviously short on this already. So got short there. And then we had that big move and we stuck for a week. We had 1 day of movement, stuck for over a week. We're moving again now on news. So these are all news moves. We've had 3 news moves. It just shows you, doesn't it, how important news is. News moves the market, then we do nothing because there's no news. News moves the market, we do nothing, no news. News moves the market. Yeah. We need some Japanese news, don't we? They are going to increase their interest rates. As soon as that happens, we're back down here. And then if that A-shaped recovery comes and the market goes, actually, yeah, this was just an expected bounce. So what's going to happen next time with CPI? Should drop. Negative. What are they going to do if CPI drops? Reduce interest rates. Negative. So the market will be looking at this going, this has got to be the last one. I don't think it's a positive move for the pound. I think it's a knee-jerk reaction. Could last a few days, weeks, don't know, but long term should be coming down. Right, that's your ADRs. RSIs, lots to look at. Going to find a lot of this is going to be similar as well to the RSI, to the ADRs. Do you have the statistics for SAH with strike rates and risk-reward ratio? Nope, because that's a load of bollocks. Why would you want to use that? I think you're looking far too granular at things. The edge is basically momentum. And as I've just shown this morning, Amy is hedged. I am $90 in profit. She is using the same thing as me, same strategy as me. Forget strike rate. Strike rate of what? Yeah. That question is a really good question. I get asked it all the time. What is the strike rate of your market reverse alerts indicator? What is the strike rate of RSI extensions? Yeah. The answer is impossible. There is no answer. Yeah. Think about the question. What is a strike rate? What is a risk reward ratio? Yeah. So if I press the short button right now on this pound yen, we use this as an example. So forget strategy, forget system. I'm going to press the short button on the pound yen right now. What determines the strike rate of this trade? Anybody? God, I sound like a school teacher, doesn't I? Yeah, I'm going short. What determines the strike rate? I don't know how much lag I've got. I could sit here for 20 minutes and then someone will go, I'll answer anyway. It's basically whether or not you hit target or you stop out, right? So what determines strike rate? Your exit, as XPie has just said. Yeah. So let's take a market reversal alert. Really good one there. Look. Well, it's not a good one. That's an awful one. But anyway, go long, right? What determines whether or not this trade is successful is whether or not this hits target or stop loss, right? So what determines the strike rate? Where you put that. This has got bugger all to do with it. A reversal alert in the market has nothing to do with strike rate. Because if I take that signal short and put my TP there and it goes down to there and bounces up to there, and you put your TP down there, and we both put our stop there, I hit target, you hit stop. What's the strike rate for you? -1. What's the strike rate for me? +1. Yeah? Strike rate has got nothing to do with any indicator. Strike rate is down to whether or not you make a profit or a loss. And that is down to where you put that entry and exit. I position trade. I do not have stop losses. What's my strike rate with it? 100%. Because I don't get out with a loss. I get out with a profit. What's the strike rate with the stock index Hedge EA? Where are you putting your pending orders? What's your offset? Are you using a 10 or a 20% or a 15%? Are you using a minimum range or a maximum range which is different to mine? What R reward are you using? Are you targeting 1R, 2R, 3R? Yeah. What trailing stop are you using? There's a billion things which go into strike rate. You can't say what's the strike. Do I have statistics for the SAH? I can create a billion different statistics for you, but do you know what? You can do this. Go in the back tester, test it. Why do people rely on other people's information? All right, the strike rate of the SIH is 97%. Do you want to buy it? Do you trust me? No. Trust yourself. Nobody in, and I get this all the time. I'm not having a go at you, by the way, FTNet. I'm just explaining the fact that you can't answer that question, which is what I get asked all the time. And I always answer it the same way. What is your TP and stop loss? I don't know. Then how can you calculate a strike rate? Oh, people don't think about it. And it's not, there's nothing wrong with that, but you can't answer that question because the strike rate is dependent on the exit, not the indicator, not the strategy. Nothing to do with it. When you put the SIH in the back tester and you test it with an offset of 5 and an offset of 10, you will get a totally different strike rate and a totally different risk reward ratio because you're using a different parameter. Offset alone, you could use 20 parameters. Target, you could use 1, 1.5, 1.2, 1.7, 2, 2.2, 2.25, 2.9. You know, you could have 100 parameters there. When you multiply that 10 parameters by that 100 parameters, you've got 1,000 system parameter permutation tests you can run. Every single one of those has got a different strike rate. Every single one of those has got a different risk reward. The way you use backtesting is if 60% plus of those 1,000 tests generate alpha, positive result, you have an edge. Because the chances of that happening in the future are good because you've run 1,000 tests and 60% of the time you made money. Why didn't you make money on the 40%? Don't know. Maybe you set your target too high. So the system parameters for risk reward were too high. Maybe your offset was too tight. So the system parameters for offset are too tight. Backtesting tells you what on average is a good and a bad thing to do. Yeah. So when you do your system parameter permutation test, you find out that there is not one profitable test that has an offset lower than 10. You know that the minimum offset you could possibly use to make this strategy successful is 10. That's what system parameter permutations and backtesting tell you, how robust the strategy is. The strike rate is irrelevant. The risk reward is irrelevant because every single candlestick you've just tested is never happening again in the future. There are no 2 days on the DAX ever that are identical in price action, pattern, and distance. There will be in distance. Just by sheer fluke, you are going to get a distance which is going to be the same. But the way that it gets to that distance and the price that that distance is are all different. There is no 2 days that are the same. So you can't use risk reward or strike rate in any shape or form to give you any prediction of the future. As I've just proven this morning with Amy, she's in a hedge on it at the moment, still, because it hasn't bloody gone anywhere. I'm out with a 2R target. My strike rate today is 100%. Amy's is 0. Yeah, same strategy. Do you see what I mean? There's no point in answering that question. All the back tests I put up show multiple things. I show different settings. Nobody should be using those, or they can use them. There is no right or wrong to it because I have no idea whether those systems, those settings that I produced will ever happen again in the future. You're a trader. Trade. Why did I get out of this short today? Because I identified an area of support and I looked at it and it bounced off of it. Then it came down and it bounced off of it again. I went, that doesn't look good. So I close it. Right decision. Other days I've gone, close it. Doesn't look good. Vroom, drops down to 7R. Wrong decision. Yeah. What's the difference? Me, the trader. The EA can't give you any information apart from there's a good chance that this might work in the future. Test it. Trade it. Yeah. There is no setting that is right or wrong. There is different. So you can't. I've got tons and tons and tons of statistics. Loads of it. Yeah. So I've done multiple system parameter permutation tests on the SIH, on the DAX. So there's 150 tests here, 141 of them were profitable. Which of those settings is the right one to use today? Not a clue. Return on drawdown is 3.57. So this is kind of like your strike rate. Yeah. So if you'd have targeted a 2R TP1 and a 4R TP2 with a loss recovery of 20% and an aggressive hedge exit, you would have had drawdown of 3.81 on your account. You'd have made 1,500. This is obviously a tiny account testing on, and a return on drawdown of 3.57. If you'd have used a 2R TP1 and a 1R TP2, which would have got hit first, and a 50% loss recovery, you'd have got a 3.17 return on drawdown. Different strike rate. This would have taken 128 trades. That would have only taken 92 trades. Yeah. That makes profit. 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 141 of the 150 tests I ran of all of these system parameter permutations generated alpha. I can't tell you which of these is going to work in the future because this is what's happened in the past. Yeah. So that's all you can do. So what it does is it tells me these ones at the top, let's take those for example, there. What backtesting tells me is that you are better to have TP1 set at either 1 or 2, because when you go to 3 or more, the return on drawdown drops. It tells me that TP2 is better to set tight at 1 the majority of the time. There's only 1, 2, 3, 4, 5, 6 out of all of those that are not TP2 set at 1. Yeah. So that tells me that you want tight targets. It's a momentum breakout strategy. So what do we need to do? Get out quick. So this tells me when the market breaks, get out quick. What did I just do this morning? Boing, boing, doesn't look like it's going. Get out quick. Right decision. That's because backtesting has told me that the best thing to do is that. I don't know whether it's right to do it today or not. I just know that on average, overall, if you want a high return on drawdown, you're better using small targets. There's nothing in here that says go for a 7R, because it doesn't get there. Why? Because ADR is way beyond, or 7R is way beyond ADR. The chances of it getting over ADR are 58%. We know that the odds drop dramatically when we get to ADR. So there's no point targeting high. So backtesting tells me, all of this system permutation testing tells me the best thing to do on average over that period of time was this. Therefore, it's probably better to do something like this. Which of them you use is up to you. The strike rate will be different. The risk rewards will be different. But I can tell you the best risk reward to use is 1 to 2R, because that's what the system parameter permutation testing has proven. It's not good to use 2R, 4R, 5R, but you will get some of those. What you find is if you sort this by profit, you will find when you sort by, I think it was sort by profit. Yeah. So when you sort by profit, what you find is the numbers for TP2 jump up to 4s a lot more, and 5s and 3s. Yeah. So what it's saying is if you want to make more money, but have a lower return on your drawdown, i.e. have the glory trades, go for the big ones, go for the runners. Yeah. So take a little bit off on the first one and go for the runner. And this is the set file that I use, 2 and 5. The return on drawdown is 2. It will double your return on your drawdown. So if you draw down by 5K, you'll get 10K back, basically, is what you're looking at. The reason I use that is because I am watching this manually. But if I can't watch it manually, that is pretty safe. It's not going to generate huge returns, but it's also going to be stable. That's what I'm looking for, stability. I've got an edge in a strategy. I need stability over the long term. What gives me something stable? That. Is it the right one to use? I've no idea. What's the strike rate on it? I don't know. You could calculate it and extract that. If you run that test, it will tell you what the strike rate is. I mean, we could run it, but you can run this, yeah. But that's what it tells you, yeah. So the statistics are useful, but irrelevant. And they are based on these two columns here, the TP. That's what makes the strike rate, not the fact that we break out. That's the signal. The signal just gets you in. The reward, the risk reward achieved, the strike rate achieved is down to what the market does after that entry's happened. That is a variable. And that is going to be different for every person on the planet, because some people will, some people won't get out at that point, like I did this morning. If you're still in it, you're still in it. You're probably hedged now if you weren't hedged before because of that little candle there. But, you know, that's your today. If you'd have used an offset instead of being 5, an offset of 15, you are just short, but not long, and you're still in the trade. You've got a chance of getting a 5R. If this thing collapses below that level today and drops down to 180% of ADR, you're getting a 5R return. Good for you. But that's what makes the strike rate today different. What happens after that entry is taken? Does that make sense? I'm not having a go at you. I'm just explaining, because it's a question. It's a very important question to answer, and I answer it. I've answered it many times in here before, and I answer it in Telegram all the time, because that's what everybody's taught, isn't it? We're taught to use risk reward. We're taught to use strike rate. Irrelevant. Doesn't matter, because everything that you go for with strike rate and risk reward is based on history. That's not happening again. Yeah, we've got war breaking out in the Middle East now. What on earth makes you think that this thing is going to do the same as it did last year? Not going to do the same thing. We're in a different time. We've got different ADRs constantly moving up and down. We've got different market conditions, market regimes. We've been going sideways for 6 weeks. What's going to happen on this breakout? Is it going to break out or is it going to fail? No idea. But if you've gone long, you'll make money if it breaks out. If you've gone long and it drops and comes back into the range, you're going to need to scale into a position or you're going to get stopped out. Your strike rate is dependent on price movement. Price movement is controlled by banks. You have no control. So it's irrelevant looking at it. Yeah, I want a strike rate of 50%. Flip a coin. Yeah, go long or short. If you want a strike rate of 50%, flip a coin. Stop looking for a complicated strategy. The strike rate of flipping a coin is 50%. Use that as your entry. But your risk reward will be based on your stop and your TP. That is a variable that is unlimited. Totally unlimited. Yeah, everybody uses the high. You go short, where's your stop? There, right? If you didn't do that and you put your stop 1 ADR above, your strike rate would be astronomical, because this thing could do that for 2 days and then push down to here and you can exit. What's your strike rate? 100%. Why is your strike rate 100%? Because you put your stop 1 ADR apart instead of at the high. What caused the strike rate? Your positioning of your order, not the entry. Thanks for subscribing, Ludwig. Welcome aboard. And again, that brings me to the whole thing about risk reward. Yeah, everybody goes put their stop there. So I need a TP here because it's got to be a minimum of 1.5 or 2R to the downside. Why? Who told you that? Why do you think that going short here and putting a stop 1 ADR apart away means you can't get out when price moves down half an ADR? If you've got profit, you take profit. If it's only half an ADR of profit and your risk was 1 ADR, who told you that you cannot get out there? You have to go for a 2R target. Why? Your job is to make money, yeah? Not achieve a high strike rate, not achieve a high risk reward. Your job is to make alpha, increase your account size. You increase your account size when a trade goes into profit. If you've got profit on the table, take the profit. Just because the stop was there and your TP is there and price has got to there, that doesn't mean you shouldn't take that. If it gets to that level and bounces and it goes up and hits your stop loss, you've lost money. Why? Just take the money. It's on the table. This is the whole premise of position trading. We've no clue where anything's going. No one's got a clue. I don't know if yen's coming down this month. I have no clue. Hopefully it is. I've not any idea. So what I'll do is I'll wait for it to come down. That's literally the strategy, isn't it? We're waiting. Yeah, we know that we can see, and again, this is what my back testing has shown me. In the past, when RSI gets extended, a lot of the time it pulls back. Sometimes it doesn't. A lot of the time it pulls back. Sometimes it doesn't. I don't know, but the odds are in my favor. The strike rate is slightly higher, but the outcome is unknown because I don't control this. The market does. So how can I possibly go for a risk reward of 2R when I've no idea if the market is going to move 2R? If the market moves me into profit, I'll have it. If the market doesn't move me into profit, I'll adjust my price and then I'll get out. Adjust your price. Dollar cost averaging is the only thing you can do to use market waves and market movement. If you use a stop loss, all you're going to do is get stopped out 40% of the time, giving you a 60% strike rate. That doesn't mean you're going to be profitable. If you get a 60% strike rate with a 1-to-1, happy days. If you get a 1.05 with a 1.5 rather, no, 0.5. What am I trying to say? A 1 to 0.5 strike rate, you're going to lose with a 60% strike rate. And you will achieve that because with the best will in the world, when you set your stop loss and your TP and price moves down and your target is at 1.5R and it gets to 1R and it bounces, you panic and you take it. You take that all the time. You never achieve that. Every now and again you do. Will you ever achieve a 5R to the downside when your P&L is sitting there with 2,000 in profit and my target is 3,500? Damn right I'm taking that 2K. Never achieve a strike rate. You're not mentally geared up for it as a human being. Aussie dollar CAD weekly range is just hit as well. More of these ranges getting hit. We've got a lot of movement going on. It's good. We've got some good movements. I'm going to get an Aussie CAD long on today. 150 ADR extended now on the pound odd. That pound is still pushing 150. So I'll be getting in short on the pound odd. If I'm not already in it. Yeah, nope. Lots of good movement. There you go. Anyway, rant over. Wasn't a rant, it was just an explanation. Thanks for subscribing, Dimitri. Welcome aboard. Still no movement on the indices. RSIs. So a lot of RSI extensions, Aussie dollar CAD being one of them. So we're extended on the hourly now, down below the 25 level. So anything that is extended beyond the 25.75 level is where I'm entering. So these are all entries. If I'm not in them, they will be in today. So looking for a pullback on that leg. We've got two, I mean, that's a new spike. So whether or not you would find resistance there, difficult to tell until we get there. But this area here specifically is a very good, strong support, which previously broke and turned into resistance. So that is a good upside target. That would be a sort of 68 retracement on the leg. But good move, potentially underway or starting there. So we can look for a bounce. Got no real support on this until we get back down into that accumulation and then that low. So this area here, which is 225 ADR. So if that doesn't work, we don't come down like that, then we'll be looking for that sort of move. Aussie dollar Swiss, and that's also extended on the 4-hour as well. So again, 4-hour RSI. Looking for a bounce. Again, looking for a bounce move. Aussie dollar Swiss, we've looked at already. That's an ADR hit. So again, that's an RSI extension on the hourly. That's also extending on the. So you're going to get an alert on the 4-hour on that in a minute as well, or when the 4-hour candle closes, which is in an hour. So there'll be a 4-hour RSI extension on that as well. So either mean reversion strategy will work with that one. Aussie dollar, US dollar, big strong push down. Already got 2 positions on that one. So yeah, target adjusted on that. We are massively extended. We're down to 15 now. So showing 17 on the last closed candle. We are massively extended on this. So big, strong move on that US dollar going on at the moment. The danger we've got at the moment is all this stuff going on in the Middle East, because the US dollar will power up if that conflict escalates. So there is a danger of going into a bit of drawdown, a bit of squeeze on these US pairs, but we'll see. So big, strong move. This is a 3-day move now. With no pullback, no profit take whatsoever. So the more we get stretched, the faster that snapback tends to be. So a good extension there if you're not already in it. And again, the more you look at this RSI, yeah, the bigger the extension on it. If you look at the 80 level, yeah, and how often we get down to this 80 level. You can't quite see it because my big head's in the way. Oops. Too far. There's good examples there. So we're extended to the 75 level just beyond at the moment. The 80 level is kind of the level. If you want the safest strategy on the planet, use the 80 RSI. You're not going to get many entries. They're all going to work. Yeah. 80 RSI is something that is just so rare that it will not just play out within days. You'll be out of it within 3 to 4 days. No problem. Once the market is pushed, the relative strength has moved below that 20 level or above that 80 level. There's the 80 extension there, and that one there, and that one there. Yeah, it just doesn't fail. So we're getting close now on the Aussie US, and the speed of movement you get back from those levels is incredibly whippy. It's fast. So you tend to get an ADR, big, strong profit takes, because the banks are so heavily long. When they get out fast, because the slower you get out, the more your P&L drops. So as soon as one of the banks and institutions sees the move starting, they all jump on board. That creates a cascade effect, and it flushes very, very quick. Euro New Zealand weekly range also hit now. Euro's pumping with the pound. So yeah, we're way below. Look, I mean, this is the lowest we've been. So lovely big snapback coming on that one at some point shortly in the next week. Euro odd also extended. I'm only going to cover the hourlies this morning. Massive extension. Again, we're above that 80 level. I'm thinking of putting an account together. I've thought about this before, just going off on a tangent again. But the 80-20, when in backtesting, the 80-20 RSI is just awesome. But I think with that sort of strategy, you can go in a lot higher risk. You're not going to get many entries on it. You're probably looking at getting 3 or 4 entries a year, maybe 5 or 6 on an instrument. So, you're just going to sit there for months and do nothing. But then when it does get into a trade, you can take very high risk on it, because the chances of the snapback are very, very quick. And especially if you DCA into it with a couple of positions, because if you get into the first one and it's above the 80 level, the second one's going to be even higher in it. It's coming down. So it might be an idea to set an account up, just a small account, but with very high risk, like risking 0.5% an entry over half an ADR. And just use that as this is the A plus setup, and that's a beauty. But target on that one to the downside, you've got multiple propulsion gaps. You've got one there which is not really a propulsion gap, it's part of the move, so it's not even a propulsion gap. Your first proper propulsion gap is this one here, which is, you can't really see it, it's behind the monthly high. So that's that accumulation. And that's where the break happens. We've got that accumulation break there. So there's a good valid propulsion gap target there as well. So it's a 23 and a 50% retracement is where we'd expect to come down to, or a 61.8, but that's not really a propulsion. It's not as good. So yeah, good, strong opportunity for a Euro odd short as well. Euro yen, nicely extended. All these yens weak at the moment. Not quite enough for me at the moment, though. Pound odd, huge extension again there, but that's based off of the news. Look at that, popping our head above the. Let's call it the snake system, the cobra system. Got to come up with a name for it. So it's the cobra mean reversion system, because when you get these massive 80 pushes, it kind of looks like a snake. It's a line. It always looks like a snake. But anyway, yeah, big push up. Same as that. Trade there, you can see on the chart, out. That is your support on the way down. So if we're going to continue a rally, we're looking for an area, we're going to get a support bounce. We've got a whacking great propulsion gap in play there as well. FTSE finally broken the low. Yeah, so FTSE's out the lows. Nasty open, really nasty open today. Look at it, just horrible sideways for an hour. So yeah, target. So we have broken that low. So your downside target on that is really difficult. It's kind of pick a number out of the air, isn't it? That level there, we know, is a good strong support resistance area. Previous level, yeah. So it's that level there. You can't see it, can you? So let me draw it in on the chart. Yeah, so it's this level here that we're looking at. So it's bounce, 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 pushed around, accumulated, came up, hit it, rejected, pushed through, supported. That's the last time it hit there. So that's a good level potentially today for a downside target, which is 150 ADR, which is exactly what we're approaching. So I'll leave that in place. And we'll watch what happens to price at that level. because that is a level they've previously reacted multiple times at. So pound odd, so nice big extension on that. Obviously that's a 150 ADR today, so I'll be taking that on the ADR reversal account, and I'll be taking it on the H1 M5 mean reversion. So drop down M5, wait for the reversal alert, which will kick in there. There's your M pattern forming, and then we're looking for a push down. Pound yen, we know about massive extension on that one. Already short on that, multiple entries. Pound New Zealand, again, big strong push up on the pound New Zealand, already short on that, just getting back up there again. You know, this is a good example, RSI failing. There's no indicator on the planet that works all the time. Just a condition, just tells me that the market's moved up. I can see that. It's just signaling me to tell me that there's an opportunity potentially for a mean reversion, which didn't work out. So that's a leg. This is the second leg. Could well have a third. Wait to see. New Zealand dollar, US dollar. Big strong push down. First entry taken on this one yesterday. Haven't put a TP on that. So TP is going to go just under that propulsion gap, under that low, which is 125 ADR at the moment to the upside. And US dollar yen. Big strong push on this. So this yen really, really struggling at the minute again. So if you look at all the yen pairs, Aussie, looks like the Aussie's coming down. Oh, blimey, look at the Aussie. This is potentially a leak of the unemployment rate we might be seeing here. Not quite sure why the Aussie is devaluing so hard ahead of news. It might just be scaling out of it ahead of the news, but yeah, big strong. So we got a strong US dollar and a very weak Aussie, which is obviously causing this to come down a lot harder today. But yeah, big strong moves there. So all these yen pairs are really, really struggling at the moment, apart from the Aussie yen, because obviously that's coming down. It shows you how weak that Aussie is, because the yen is really weak today. This is coming down against the yen. So we're waiting for some news out of Japan as to when the move is coming for interest rates. We were told it could be January, but they never give us any accurate response. So as soon as we get that interest rate rise, we should get some really good strong strength in the yen. So I have no problem being in drawdown and being short everything against the yen at the moment, because that move is coming. The downside obviously is the swaps are quite high on the yen, so it tends to eat a lot of profit away, which means you need bigger moves to actually make money. But yeah, holding on to them at the moment. I've been in this US dollar yen now since the beginning of January, so a couple of weeks. We had that rally, went nowhere really much for a week, and now we're on a new rally this week. So waiting for them to pop the hammer on the yen. Are you looking at any potential aggressive on any of the positions? No, not at the moment. Not in anything. Nothing's in deep drawdown yet. US dollar yen's the most drawdown, and pound yen. So both of these yen pairs, it's only 2.5%. So I mean, yeah, pound yen. I mean, if we do get a continuation rally on the pound yen, and we get back above that monthly high, I mean, if we get a push today up to 125 ADR, I might consider one. We've got a backup coming at 175 ADR. So this anywhere in this area here, I would expect, if we continue to push, we're gonna get a pullback start. Yeah, so akin to this move. Look, that's what we're gonna get. But where we're gonna get it from, I don't know. My average is only at 150 ADR, and that's only because we've pushed up today. So when we opened this morning, I was only about a 125 ADR target. So I only need one big down day. Look at it on the daily. This is why we keep our average within ADR. All we're looking for is one of those. Rally, 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 drop. Yeah. So we're looking for, if you measure that candle there, for example, that's an ADR hit to the downside. Yeah. There's my average. Only want a down day. So this is it. This is position trading. We sit in drawdown waiting for the candle. We're waiting for the market to move, to profit take, to get out of those longs that it's in. Don't know when it's going to happen, but we're on a 3-day rally. We could get a 5-day rally. If we get a 5-day rally, that's your turning point. If we get a 3 to 4 day rally, potentially we could be coming out of the December high. We're going to have limit orders trigger at December high. Look at what happened at December high. We pushed up, sellers. Pushed up, sellers. Push back. Yeah, opened, we pushed up. This level here, for 3 days, the sellers went, we're short. And then eventually the market went, yeah, okay. We're coming back to where they sold this move. Yeah. Speculative players in December waiting for that yen interest rate increase. They're still waiting for that yen interest rate increase. It's highly unlikely we're going to break that high. So I'm scaling in to that at the moment. But if you want to do aggressive, if you're worried about the drawdown on it, I live, as you know, in 5 to 15% of drawdown. That is my home, waiting for movement and banking stuff that works out and dealing with stuff that doesn't. So at the moment, I'm not particularly worried about the pound yen. It's turning now, and I've got an entry, in the next hour. I'm back at where I've got my 5th entry. It's only 5 entries in it. So if we push above ADR today, I might have a look at an aggressive entry at a level, but I'm not convinced of this move. Yeah, this is a CPI 0.1% bounce, which the market knows is coming. We know it's coming. They've told us. If you look at this, is why you watch this thing, and we pay attention to the talking heads. They've all been saying we anticipate a bounce in inflation. Yeah. So the market is anticipating a bounce in inflation. A bounce in inflation happened today. Why are you doing that? After the bounce in inflation, what comes next? A drop in inflation. What happens when you drop inflation? You drop interest rates. What happens when those two drop? The currency drops. Why are you buying it? Doesn't make sense. I don't think this is a move. I think this is undoing itself. But time will tell. I think we're going to get an A-shaped recovery on this, and I think either by the end of today or tomorrow, we'll be here again on all these pound pairs. Don't forget as well, we've got the retail as well for the US this afternoon. We've also got tomorrow, we've got Jordan speaking as well. So this is quite an important one. Just suddenly saw it jump out at me again. You're lucky if you get Jordan speaking once a month or once every couple of months. Never says anything, so everyone really pays attention because the Swiss don't tell you anything. They suddenly go, we're changing interest rates. And it's like, what? And this is why you get these huge moves in the Swiss franc and continued rallies, because they never tell us anything. Nobody's got a clue what they're doing with interest rates. No one knows anything. So important one tomorrow coming up at 10:30. That's all I've got for you today. So the only thing I'm looking at banking at the moment today, where we are, is pound US. That one there. Which my target is all the way up there. So this is the one I would expect to go into drawdown on, rather than the other pound pairs, but we'll see. So ADRs, I'll be getting some more on that today. Euro CAD is looking like potential target opportunity. So this can still rally the euro, although Lagarde's come out today and said they're dropping the rates by the summer. But again, it's not anything unexpected, is it? So it's not quite enough for me to bank. Although this is an ADR reversal, isn't it? So this is a scalp play. So I really shouldn't be looking to get greedy on it, should I? Because these fast exits. Yeah, I mean, we're half an ADR. Should really take that one. I'm going to take the Euro CAD off, actually. might as well just bank it, because I've got euro US dollar long, and I've got New Zealand dollar CAD long as well. So that CAD exposure that I've got on the euro CAD, I've still got on with the New Zealand CAD, and I've got the euro exposure long with the euro US. So if we get negative retail numbers this afternoon, that euro US is going to go into profit. So I might as well bank that one. Something to bank. I just want to continuously bank at the moment, because this market is constantly doing this. So when you get anything, you just want to take it, because there's a high probability that we are just going to pop back down into here again, and then we're going to pop back up to here again. That's within ADR. Everything's within ADR. There's so little movement. And then you get these massive days where we're getting these huge ADRs off of news, and pain in the arse at the moment, isn't it? No change on the hedge either, so can't bank anything on that one today. But P&L's looking a little light at the moment. ADR 150 bounce. Hey, look, everybody, what happened? Shock horror. Support and resistance bounce worked. Euro New Zealand. Did I cover that one? That was a weekly range. Yeah, so Euro New Zealand's finally broken out of the November high. December high. On its way back by the looks of things. So this is kind of a rounding bottom move. All the wick-off traders went, hey, there's a wick-off spring there. Gap there, look. So yeah, I mean, just pushing up into propulsion really, but that's this euro move is going to be undone at some point when they start the interest rate drop and the inflation figures come out. So yeah, it's just a breakout at the moment. Whether it's an actual breakout or whether it's a false breakout, don't know, but not quite strong enough of a move for me. But the market structure's certainly shifted sort of bullish. I mean, this is the new high going in, so pull back into that high maybe, but there's so many levels. This is the trouble with these ranges we've got at the moment. There's so many levels you can pick as support and resistance. It's quite tricky to figure out, but you just got to look for what is the most reactive point. That is the most reactive point at the moment. We pushed through it and we tested it 3 times. So if we're going to pull back on that leg, that's what I would look to do. But I'd want it really stretched first, and ideally come and retest another level or something up here. But it's just not a very good chart at the moment. You're in New Zealand. It's just sideways mess. Morning, Yusuf. What risk per trade are you using? 0.1. It's all on the charts. I put it up here so you can see. What's your opinion on wick-off? It's market structure at the end of the day, isn't it? Wick-off. If you look at, I mean, this is the conspiracy theory thing, isn't it? It's almost with everything. The conspiracy theorist will always come up with a theory. So if you look at any chart, you can always find an instance where price has done something, and then you can find an instance where price hasn't done something. Yeah. So with a wick-off play, you have a drop, you have a bounce, and then you have a drop, and you tend to go into some kind of range, whether it be an even range or in this case an uneven range. And you come down and you retest the lows, and then all of a sudden you have a spring where it goes and tries to get out of that level and it can't. And everybody goes, that's where you go long. That's where you put your stop. What we're going to do now is going to move to the top. We're going to accumulate and we're going to break. usually a symmetrical triangle pattern or something, or a flag or something at the highs. Yeah. So yeah, but it's a mess, and it lasted from the 29th of November until the 17th of January. You took your trade on the 19th of December. I can show you a million times where it did that and that. There was no spring. So you didn't get into it, Mr. Wyckoff. Yeah. It's price movement. There were more sellers that time than buyers at that level. They tried to move price down, which is what we call a price discovery move. And they discovered that there was nobody willing to buy any more of their sell orders there. So they couldn't push it down any further. So the buyers took control back. That's what happened in the central banks on that day. Call it the Samson pop, if you want. The Wyckoff spring. It's just observation of price movement. It's market structure. It's bank and institutional price discovery. It's balance breaking. It's breakout failure. There's a thousand. This is like, you can label anything you like. All of it works sometimes. All of it works to a certain degree sometimes, but it all fails sometimes. Sometimes you'll be sitting there on a chart waiting for the Wyckoff spring short. So everybody that watched that went potentially short there. Stopped out short, stopped out short. Oh, that was the Wyckoff. We should have gone that way. You know, but Wyckoff typically is an accumulation after a drop or an accumulation after a pop. So you need that bit to make it a Wyckoff setup, don't you? Wyckoff is based on Elliott wave. Wyckoff is based on all sorts of theory. You know, it's the old stop run theory that the banks are hunting retail stops. Even though they exist. Banks are executing orders on behalf of Microsoft. Do you think they got any inkling that you're sitting there underneath there? Not a clue. It's an algo. It's if you want to believe in algos, believe in algos. Yeah, there are algorithms running. They're called quants in central banks, but they're not algos running for any other purpose than to execute orders. And they don't do the same thing. Yeah. An algo's job is to split up and dynamically distribute an order into the market. Yeah. So I come to you as Mr. Microsoft with a 25 million long on the Euro New Zealand because we need to execute a load of stock, chuck a load of stock from Europe over to New Zealand. So just convert that 25 million over there for me, please. Okay. The algorithm splits that 25 million down into 75 orders. And it executes an order of X million, of X 100,000, and the price pops, then it drops. And then the algo goes, next bit, next bit, next bit. And that's what the algos are doing. They're executing orders on behalf of commercial bank clients. Yeah. That's not going to happen every time. Why does it happen? Don't know. Do you know anybody in a central bank that can tell you? It's a pattern, like anything else, like a head and shoulders. Sometimes head and shoulders work. Sometimes they fail. They fail way more than they ever work. When you see a head and shoulders on a chart, it's really obvious. Yeah. How many times have you seen this pattern? Yeah. That is way, way, way more prevalent in the market than that. What is this? A double bottom bounce and a new high. What is this? A head and shoulders break short. Why don't you see that? Because that's really easy to spot and that isn't. That is a failed head and shoulders pattern. Go and trade some head and shoulders and see how many times they fail on you and they bounce from there and they never break that neckline, or they break that neckline and then fly up and take your stop out there or there, depending where you've put it. It's patterns. It's just price action. On the day that shoulder forms, at that point there, if Barclays get told by Microsoft to execute 25 million long, that's going up. Do you think they've got any inkling that there is a pattern called a head and shoulders by some bloke sitting in his bedroom looking at this going, it's a short? Hey, totally random. The whole thing is totally random based on balance of orders long and short. Nothing to do with it. Why didn't this come down and test this bottom? Because when that went down there wasn't enough sellers to drive it short. There is no other reason. The buyers had a larger balance of orders at that point, which is why we didn't get there. When we got to this level the following day and the day after, the guys that executed that long order still had orders on their books to execute. So they did, because that's the price point they wanted to make the purchase from. There's no other reason than that. This is why support and resistance works. Why did that bounce exactly at that point? Because that's where they shorted it. That's where they tried to add to their move, but their balance of orders was different. That's why price moves up, down, not because Mr. Wyckoff invented a system and strategy that said you're going to get a spring trap after a bounce at the bottom so many times when the market's dropped. Rubbish. It seems to me that the position on any given pair on H1M5 mean reversions are slightly different. Yeah, so I use lot size, 1.3 lot size multiplier. Yeah, so I've always done that, 1.3. Why you stopped using two currency rule? Just because it's easier to trade everything with a lower risk. But carry on using two currency rule if you want to. Nothing wrong with it. Worked for me for a long time. But this is having this 7 exposure short on the US. So my exposure on the US at the moment is 7 of 0.1s. So 0.1 times 7 is 0.7. If I had gone short only twice with 0.25 risk, I would be 0.5 short. So I'm ever so slightly higher exposed, but I have 7 opportunities to make money, not 2. So look at the perfect example on the screen right now. Yeah, pound US dollar is in profit. The other US dollars are in drawdown. I can bank that and reduce that exposure down because the pound is moving independently of the US dollar. The pound is moving up, the Aussie dollar is moving down. So this one can pay me while this one goes into drawdown. The exposure is the same direction on the US dollar, but the opportunity for banking is increased to 7 instead of 2. There is a slight higher risk of drawdown because, as I've just shown you, I'm 0.7 exposed instead of 0.5. So it's slightly more risk, and drawdown does go a little bit higher, but it means I get more opportunities to bank, so I can bank smaller and bank more often when the pound decides to rally. And you know, we have a news event. Don't forget, every pair you trade there's 2 things moving it. You got the base and the cross. So if you are long only on that, yeah, if this thing goes long by more than that goes long, this comes down because this currency has the ability to make this drop. But every other euro pair will either go sideways or push. Euro New Zealand will come down. So there's no problem having exposure across all the different crosses because something's going to move. If both of them go the wrong way at the same time, then obviously you do take a little bit more heat. But that's your job, managing your portfolio and managing your exposure, your risk. So up to you. You know, you could set it up so that you've got no more exposure than 6 or 4. So put the EA on. But this is the thing. You know, people always say to me, "What pairs do you trade?" I don't trade pairs. I trade opportunities. So when the RSI dashboard lights up like this is an opportunity right there on the Aussie US to go long. I don't want to miss this opportunity because I'm not trading that pair, because I'm trading the Aussie CAD and I'm trading the pound US. So I'm not going to take the opportunity on the Aussie US. Why? Because it's a bloody good opportunity. You should be taking it. So trying not to limit your exposure on individual currencies because you don't know what currencies are going to move. I have this conversation with people quite often. I only trade gold. Why do you only trade gold? Well, because I'm an expert at gold and it trends really nicely. So you're a trends trader on gold. Yeah, I do really, really well out of it. Excellent. What happens when gold goes sideways for 6 weeks and you don't get a trend breakout? Don't make any money. So you don't get paid for 6 weeks. Right. So that pound US dollar move that went like through the roof that we longed because the RSI was extended, you didn't take it. No. Okay. Why? Because I don't trade the pound US dollar. So you trade gold. But if gold only goes sideways, you don't make any money. Right. So it's like saying, I'm not going to go to work for 6 weeks because I can't be asked. All right. What do you think your boss is going to say? Can't trade individual instruments. You trade opportunities that present themselves in the market with a strategy that you know has an edge long term. When this thing gets extended below the 80 level, probability of a pop of an ADR or higher is incredibly high. I'm taking it. You can't limit yourself. If you limit yourself and limit what you trade because of a reason, you're going to miss some amazing opportunities like the euro pound getting stretched ridiculously low. Yeah, so, but you know, I get asked it all the time. You know, why don't you trade gold? I don't trade gold because I don't make profit out of it. I'm awful at trading it. I just don't do it. That's why I don't do it. Not because, and if it sets up with a beautiful opportunity on gold and it gets extended beyond 90 RSI, yeah, probably a really good trade, isn't it? But I've got 28 FX pairs. I just don't need anymore. Plenty of opportunity. Euro pound, we're on that now. I am long at the moment. But the pound is obviously rallying hard, so it's dropping. Be getting into another position on this one. If it drops down to sort of 150 ADR or so, we're running into 150 ADR. We're running into potential support. So if we can get down to there, there'll be another entry going in. Bang in the middle of that accumulation. Then we got the monthly low. Look at that wick off spring, everybody. Big pound New Zealand 125 ADR. Big drop, bounce, accumulation, bounce, accumulation, bounce, accumulation. Spring, sit around at the highs, pop. That is textbook wick off. Twice we've seen it now. Oh my God, what's this? Bottom, accumulation, bottom, accumulation. Hey, we've gone below the low. What do you think might happen if it goes above that high? It will either do that or that. What's the odds of one of those things from that wick-off setup working? 50-50. I don't know if it's going to be a wick-off spring that works. I don't know if it's going to be a wick-off spring that fails. I don't even know if it's a wick-off spring. This might collapse down and not even be a spring. It's only a wick-off spring if it does that. Yeah, if it does that, it's not a wick-off spring, is it? But all the wick-off traders are long when it breaks above that level. Just a setup. The odds are the same. But you've got to have a reason to get in the market. I have no problem with people that trade wick-off at all. I traded wick-off for a while. And like everything, sometimes it works, sometimes it doesn't. So it's nothing wrong with taking it. You've got to have a reason to get into the market. You need a strategy. Just got to stick to it. If you believe in wick-off, do it. It will work sometimes. There's nothing wrong with it at all. I have the same exposure right now, and it's better to manage. That's why mean reversion works. Yeah. Right. That's all I've got for you today. So banked a little bit on the ADR reversals. I've got some banking I can do on the pound CAD long. So I need to really look at this, don't I? I keep forgetting I've got to actually manage these hedges. That looks like a pretty good spot to get out of that long, doesn't it? know what I'm going to do. I'm going to stick a little trailer on him of 250. So I'm just going to get out of the long when it comes back. Because if it returns to origin, I can then get out the short. And that's obviously all banked in profit. And what's that going to make me $35? Really weird trading a small account again. Because I'm looking at the numbers. I'm looking at the percentages and the numbers are so small. Really weird seeing tiny little numbers like banking $50 just doesn't make sense to me. But I'm used to trading much bigger accounts rather than a little 15K, which is weird. But percentages, this is why we focus on this, percentages. When you get to a quarter to 0.5%, stick it there. It's yours. So $50 is actually I can't work it out. My brain's fried. $75 is 0.5%. So that's about 1/3%. That's bankable, isn't it? Bank 1/3% to 0.5% a trade, you'll be happy as Larry. The trouble is I'm running 3 accounts with 3 different balances now, and it's really confusing me. This is why I'm really having to focus on this column. Because this is the king. This is a percentage of the account balance. So this is what I've got to keep my eyes on. This is why it's there. Have you heard of Al Brooks? Yeah, God, yes. Who hasn't heard of Al Brooks? He's one of the most famous traders on the planet. Very, very, very good trader. He's the godfather of price action. So yeah, pay attention to Al Brooks if you want to learn everything about price action. But I've said this before, and I will say it again. You can be incredibly knowledgeable about trading, and a lot of people are. I'm very, very knowledgeable about trading, not because I'm a good trader, because I've been trading for 15 years. That doesn't make me good. It makes me knowledgeable. Yeah, you read all of Al Brooks' price action books. He's got 3 of them. You read all 3 of those books, you'll be an expert in price action. Does that make you a good trader? It makes you an expert in price action. Hey, look at that bearish engulfing that happened yesterday at the previous day's high on the Euro CAD. That price action is a double top bearish engulfing shorts. Al Brooks taught me that. Does it make me a good trader? No, because if I took that trade, what makes me a good trader is where I decide to get out of that trade, as we were discussing earlier. Identifying chart patterns, identifying the right shoulder of a head and shoulder doesn't make you a good trader. It makes you really good at spotting that. Knowing Elliott wave inside out and knowing when there's an ABC pattern forming doesn't make you a good trader. It makes you really good at spotting Elliott wave. Yeah. Knowledge doesn't make you successful. It helps a lot, obviously, but it doesn't make you a good trader. It makes you knowledgeable. I've read every book under the sun to do with trading, and none of them made me profitable. They made me very good, and that's why I know Wyckoff inside out. I traded it for about 5-6 weeks, maybe. Didn't work for me, but I know all about it. I can show you Wyckoff setups, but it doesn't mean they're going to work. The problem with trading, I think, and especially with things like Wyckoff, is, and this is the biggest problem with pretty much all trading on the planet because we're human beings, is patience. You're sitting there in this thing and you're waiting for a Wyckoff spring. And you see the drop. And at the hard right edge of this chart, this is your low. You've made another low, and then another low, and then another low which pushed up. That is a Wyckoff spring, because you don't know how long the accumulation is going to last before the break up. So there's a Wyckoff spring there. You've waited 4 days sitting on your hands going, please drop below the low, please break above the high. Entry, stopped out. Same day, afternoon session, stopped out. Okay, so that didn't work. And then it drops down and you go, oh, maybe that's the spring, because it's never the same. You look at 10 wick off spring setups, they're never the same. Never. Some will go further than others. Some will go down by a pip, and they'll call it a wick off spring because it broke by a pip, but it's really a triple bottom. Yeah, everything can be something else, can't it? But the problem is you're sitting here, sitting on your hands going, I've got to get in this market, otherwise I can't make money. So you take everything and nothing works, because that was the wick off spring. But it wasn't, because it came down and double bottomed. So now you're going, whoa, we should be waiting for another wick off spring. You sat there for 2 weeks and it never came. You haven't traded. A massive problem. All setups have it, which is why I love RSI, because RSI just gets me into the market when there's strength in the market. What's the market doing? Moving. What do you need to make money? Market going up and down. Yeah, you can't make money in a sideways market unless you know where the range highs and range lows are going to be. By the time you've identified a range high and a range low and you're ready to take it, chances are the market's going to break out of it, because it's done its accumulation, it's formed its range, which is why people that try and trade range only fail. Everything fails because of what? Stop loss. Remove that, everything works, because if it does break out and you wanted to take that short, you just wait for it to come back down again at some point in the future. Change your price. It's much easier. Which is what I trade in the bootcamp, or teach in the bootcamp. Do you watch Premier League? No, don't follow football at all. I'm one of those rare human beings, those male human beings that doesn't like football. There's not many of us around. Believe me, I go to the spin room and I sit on the spin bike with all my mates in the spin room. See Chelsea match last night. Who were they playing? Liverpool. Do you not know that? No. Who's the manager of Liverpool and Chelsea? I haven't got a clue. Where do they play? I have no idea. Where are they in the league? The only thing I know about football is what I hear at the gym. That's my education level on football. I used to play it as a young man, and I used to play it for one reason. I played for the pub team, and after the match, we went to the pub for the whole afternoon, ate roast potatoes on the bar and drunk pints. That's why I played football. That's my level of skill. I was a defender because there was little running involved, and I waited for people to run to me, and if I couldn't tackle them, someone else would pick up the slack. That's my football experience. Terrible. At one point, somebody in the team was off. I can't remember. I think they were on holiday or something. And I got put up to right midfield. I nearly had a coronary. I've never run so much in my life. Midfielders have to run the whole pitch, all 90 minutes. I got back to the pub and I was like, have a Coke, please. Not interested. Social, not follow. I don't follow any sport, to be honest, really. Not into sport. I use stop losses only for prop trading. Yeah, me too. And it's making me pull my hair out. Yeah, that's one of the problems with prop trading and with stop losses specifically. That's, I keep going. The most important, for me, the most important slide in the bootcamp is the one on day one. And it'll probably be there because I show it all the time. And the website loads. There you go. It's always there because it's the one I use all the time. Yeah, this is why people fail at trading. This lot, all of this, you're pulling your hair out because of one of these reasons. All traders are pulling their hair out because of these reasons. All of these reasons are caused by you being stopped out in the market. Position trading has its own problems. Drawdown control needs to be done. So you're still going to take losses, but you're not taking them all day, every day, which is what all traders do. And it makes them pull their hair out. You miss out on a trade, it makes you cross. You hop to another system, that fails, that makes you cross. You hop to another system, that never ends. You try and hit the top and bottom of a range. Sometimes it works. When it doesn't work, it makes you cross. You try and pick the pullback in a trend if you're a trend trader, and you pick the point where the market reversal alert has triggered short and everyone else saw that, but you didn't because it retested and went short. You tried to go long. You pull your hair out. It makes you cross. You get stopped out all the time on most of your entries. Makes you cross. 50% strike rate. Everyone goes, you don't need a 50% strike rate. You can survive on 33. 77% of the time, I'm going to be pulling my hair out. That's going to make me cross. Not being able to hold on to winning trades makes me cross because I get out on a pullback and go, oh, Christ, at least I got the money back from the last loss. And then it goes to 7R. Makes you cross. Moving break even and getting stopped out on a pullback just before it goes in your direction makes you cross. Revenge trading because the market owes you because you got so bloody cross makes you even crosser. Using candlestick patterns that don't work consistently. Talking about Wyckoff this morning, Elliott wave, head and shoulders, bullish and bearish engulfings, load of bollocks. It goes up, it goes down, it goes sideways. All of that makes you cross when it doesn't work. Not being able to pick the right support and resistance levels for entries makes you cross. So if that one doesn't work, the next one doesn't work, the next one probably will. That I can solve. All of those things are caused by one thing. Being stopped out. You're trying to time when the market is going to do something. It's random, controlled by central banks and institutions. You can't time it. They're in control of timing, not you. Your job is not to time the market. Your job is to make money in the market when the market moves in your favor. You can't control it. That is what makes you lose. That's what makes you cross. That is the problem, the root of every trader's problem. Every strategy teaches you to use that and expects you not to get cross, not to pull your hair out. Wrong way to look at it. The banks do not go long with a 25 million order and put an order underneath if another bank pushes them down to stop them out of that 25 million position. Lunacy. They're not doing that. Why are you? That bank that's gone long 25 million, you can be damn sure they will move that price back into profit at some point. They have to. If you've done the same, you will be with them. You just don't know when. Unfortunately, the banks going long 25 million, they can go into drawdown by a couple of billion on it because they've got quadrillions. Yeah. Risk. It's all proportionate. The moves will do what the moves do. You can't time it. I don't know when my pound yen is going to come back down again. It's going up again. I've no idea. It will. Always does. Yeah. You went long there, there, and there, and there. By there, you were going, oh, for God's sake. Oh, I'm out. 3 days later. No, 2 days later. 48 hours. I'm out. Japanese come out this afternoon. Suzuki goes, we have decided interest rates will be raised on the 23rd of January when we announce the interest rate change. I'm out. I just need Suzuki, Ueda, someone to open their mouth and tell me about the interest rates. I'm out. I don't know when it's going to happen. I do know on the 23rd, they will be changing their interest rates. So next week, on Monday, there's a high probability that becomes a zero. I'm out. If it doesn't become a zero, I'm in for another couple of weeks. I can't do anything about it. But if you want to try and time when that is going to happen, how many times are you going to do it and be wrong before it happens? Excellent. 1, 2, 3, 4, 5, 6% of my account done. Ah, brilliant. So what do I need now? I've lost 6 times in a row trying to time this move. I need a 6R risk reward on this one. When that gets to 3R and I'm sitting in 3 grand of profit on my account and it pulls back and it makes my P&L go to 2 grand on my account, what am I doing? Getting cross, getting anxious, getting worried. Holy crap, is it going to come back? Should I break even? I'll break even, then I can't lose any more money. Break even, drops down to 10R. Could have made you a +4. What did you do? Break even. Why? Because you panicked. Because you can't time when it's going to happen. Doesn't work. Sometimes it does. How many people have passed a proper valuation? Stage 1, stage 2, funded, paid. I found it. I've cracked it. Next week, I've lost the account. You had a lucky run. The strike rate of your strategy was 55% with a 2R for 3 weeks on the trot. Then it failed 10 times. They know that's going to happen because that's what happens. It's real world. They're not silly. Pound US dollar has hit ADR as well. This pound's really going. They really like this CPI figure, don't they? So target potentially might get hit on this. Ideal for me would be that to come up and hit the target and then put in an A-shaped recovery this before Friday. Back down there for Friday. Loads of bullish news on the US dollar. We're down there. Loads of bearish news on the US dollar. We're up there. If we got up there without resting, we'll be back down there next week. I don't know when. Can't time it. Problem with most traders, including me, is when we lose, we hope. When we win, we fear. But the psychology should be reversed. Yeah. Remove the psychology. That's what the position trading bootcamp is all about. This is about removing psychology. You can read this. I haven't. Mark Douglas's book will be here somewhere, Trading in the Zone. I've read many books on psychology. Tom Hugard's just released his book on psychology. Yeah, good book. Doesn't teach you how to trade, teaches you about psychology of trading. But it's the thing that you cannot change. You're a human being. You are who you are. It's like getting married to someone and then that person saying, love you, but you need to change this. But for 35 years, I've been doing the opposite to that. You can't change these things. You're a human being. When you get into trading, you cannot change your psychology. Some people can. It's a very rare skill to be able to change psychology, change the way you think about the markets. It's easier to remove the psychology and just accept the market and not think about what's going to happen because you don't know. You've got no control. You have control over who you marry, when you marry, what you do in your marriage. In the markets, when you press a button, you have no control over what happens next. Your psychology is coming up with 1,000 different things that could possibly happen. And you have to adjust your positions to account for those. But you have no way of knowing. So if you remove that by removing the take profit and removing the stop loss, you are sitting with what? An order floating in the market, going positive and negative in a P&L. Pick it when it's positive. Don't think, I've put a stop. It's got to go there. Otherwise, my risk reward is wrong. If it can't get there because there's two bloody great supports it's hit and it's bounced at, take it. Hasn't hit my target. Screw your target. Get out the market. You've got profit. Psychology's not there. It just doesn't exist anymore. This is what you've got to get rid of. But if you can change it, change it. You know, there's a lot of people that can trade with stop losses very, very well. Tom Hugard being one of them. Some people believe he's a complete con man as well. Yeah, some people believe that his P&Ls don't add up with what he gives in his group. I don't know. I don't follow him. I don't follow signal services because it's impossible to get the same entries. Therefore, it's impossible to get the same results. When you don't get the same results as somebody else is telling you should have expected, what's it do? Make you cross. Everything makes you cross in this game. Just trade. Press the button. Wait. RSI's just closed on the 10 o'clock candle. Lots of big extensions now. We've got 80-20s. We've got 3 of them to look at. Aussie US, Euro odd, and Pound odd. We've got lots of these Pound and US extensions as well. A lot of stuff moving. Finally, we're getting some movement. So this will all mean revert, but we could be the start of some squeezes. So you just need to be prepared. This Pound US, we're above ADR and I'm close to target. So I'm just going to stick a little trailer on it of 10 points. 100, not 10. That would have been bad. So basically I'm going to trail the low of this candle. So it's either going to hit my propulsion target or I'm going to get stopped out if it decides to start recovery, because I don't know if it's going to or not, but I'm just going to bank something. Need to bank something. It's getting hard to find anything at the moment that is actually moving fast enough and hard enough. For that, I'm going to bank on that Pound CAD as well. that one. Pound US on the ADR is 0.2%. I'm going to do the same with that. So 100. Ooh. This is an ADR reversal. So, oh no, this is a hedge. So yeah, because this is account smaller, that's actually 0.2 to bank. So that's worth banking. That is worth banking. So those two together is going to bank me 0.5%. Job done for the day, isn't it? So. Sell for US dollar Swiss now for 4-hour time frame. Yep. Pound yen ADR. So I'm in short on that already. We haven't had a reversal alert. It is stalling out in this accumulation, so this could be a nice pullback. It's above the 75, starting to tick down. Looks good. Reversal alert on the hourly. So you've had a 15. You haven't even had a 15 yet. So the 15 and the hourly are the same level, basically. So when you break that low, this accumulation, you'll be in. But yeah, looks good. Looking for a 50% retracement. Again, fib is another really good example of timing the market. If I'm a trend trader, we've had a breakout of that range. What am I looking for? An entry. So I can either take that high and assume that pullback, or I could attempt a 23, 38, 50, or 61.8 retracement, possibly a 71.9, depending on who you look at, what you watch. But all of these are levels that if market structure is going to remain bullish, i.e. we're going to make a new high after a pullback, that's what market structure is, one of those levels is going to get hit, isn't it? Which one? I'll go with that one. What am I going to do? Put a bounce there, stop loss there. If it invalidates that one, I'll get stopped out. Okay, but then it might bounce there. So when it goes bullish, I'll get in at the 38 and I'll put my stop loss under the 50. Oh, no, okay. So now it's pushed down. It's bounced round about the 50. So I'll go long there. I'll put my stop under the 61.8. No, that wasn't right either. Okay, well, my last chance, I'm going to go long at the 61.8 and put my stop under the 71.9. That works. I've got 3% to get. What do I need? A 3R. When it gets back up to there and pushes back down again, I panic, I take a 2R. My strategy designates I need a 3R to make a profit. I am a losing trader. I got a beautiful trade, worked perfectly. However, this is why I lost. Because you don't know, you can't time. Only pick the 50s, no problem. Sometimes it will do that. Sometimes it will do that. 50, 50. Flip a coin, same odds. Thanks to position trading, last year was the first profitable year since I started. Cool. Many years ago and many systems hopped. Yeah. It is very, 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 very hard not to have a profitable year position trading. The ways that you don't is if you over leverage and use too much risk. You don't do drawdown control and sit there and cross your fingers and hope, or you do something else stupid, like get into positions a quarter of an ADR apart, spacing too close together. There's a lot of stuff that can get you wrong. But if you follow what I show, it's hard not to make money, which is why in here I say somewhere, give it 60 days. I can't remember where it is, somewhere in here. But there you go. All I ask is to try this method to trade for 1 month on a demo account. If you've not increased it by 5 to 10%, then off you go. But give it a month, because we don't do it quick. It's not a fast strategy. It's a profitable long-term edge. So you've got to give it a month to play out. At least, ideally a quarter. But yeah. It's what did it for me. I became a break-even trader trading mean reversion and trend pullbacks using moving averages and market structure. But I only became break-even. But I became break-even because I got my patience under control, and I stuck to a strategy, and I only took trades that set up, and I sat there on my hands and did nothing. We had a forum group going at the time, and it was a standing joke. Somebody would post a GIF like that, and everyone would go, yeah, I can't find any either. And everyone knew. We all told each other, if it's not there, do not press the button. Sit on your hands. It's the only way you make money. Not being in the market is a position. You can be long, you can be short, you can be out. It's a position. It's the most profitable position you'll ever have, being out the market, because you can't lose any money. Got to do it. That makes you break even. If you can get that bit under control and then realize that you can't time the entries correctly and remove the stop losses, your strategy suddenly works. Doesn't matter what strategy you're using. Pick a strategy, any strategy you've ever used in the past. Trade that strategy again. Take every entry, remove the stop loss, and see how that profitable strategy that you had, which didn't work out because it wasn't profitable, but it looked like it was profitable, suddenly is profitable. Why is it profitable? You've removed the problem. Easy. I read the book Trading in the Zone by Mark Douglas. Yeah. Brilliant book. Totally about psychology and about dogs attacking you and things like that. But it makes you understand where the problem lies. And then it's down to you to try and fix it. Mark Douglas was one of the reasons I looked into bank strategies and how banks make money and why and how they move the market. That's what kind of sent me down that route, because I twigged that I was the problem and I can't fix myself. As soon as you realize that, this is why I say in the PDF here, the first thing you look at in this is the 5 steps to becoming profitable, which is to understand what's going to happen to you. You've got to know what's going to happen to you before you do it. Otherwise, you won't understand you've done it. And then it's you're not in control. So if you know what's going to happen to you and you know you can't control it, you know what to do. It's really simple. You boil it down to its simplest parts. I can't control the market. It's going to go up and down. And I'm going to get to a point where I think I've cracked it. The market's going to make me a loss and I'm going to realize why I went wrong. You're going to do that step many times until you suddenly have eliminated all the things you've done wrong. And then when you understood you've got no control and you understand what not to do, there's only one thing left, the right thing. Can't fail. Got to go through the steps. This is why this PDF's here. That shows you all the steps. Euro pound 150. US dollar Swiss is coming down nicely now. And US dollar still rallying. 150 on this euro pound. Really coming down, isn't it? So there's that level that I drew on the charts, which is literally just that low. It's nothing particularly special. I wouldn't be surprised if it blew through that. But that's where I would really be interested. That's 225 ADR. Big reaction to this. Might rally this pound, I don't know. I'd be surprised if it did, though. Have we had any more news from the IMF? Eurozone CPI figures are in as expected. They always are because we know them. I don't even know why they released that. It's like they release the forecast figures, then they give us the German and the French figures, which makes up 99% of Europe. And then they give us the actual figures, which happens to be the same as the French and the Europe figures. So this is not a shock. It comes out as red news, but you look on the Forex Factory calendar, they don't even post it. It's not interesting because we know it. We know the number. They've told us it already. It's like saying there's only one horse running in this race. I'll bet on that one. You're going to win. So, right, I'm going to leave it there. FTSE out, obviously. That's stabilized at 4R. DAX ain't going anywhere. So I think this is probably just going to turn into a hedge loss today, unfortunately. If I do see any big movement on it and I do decide to get out, I will try and post it in the Telegram group. I know I'm not very good at this, posting in the Telegram group, because I tend to see things and just do them, and then something happens and I don't post it. But there's very little you can do with this today. We are sitting in rotation. So I'll be closing this out anyway before the New York Open, but we have got that 1:30 news on the US retail. So that will affect all markets. if it's a big number. If it's nothing, then it obviously won't do a lot. But if it does move the market, we'll get a movement on the DAX as well. So there could be some movement an hour before the close, which will get us to a level that we can potentially take. So I'm literally just going for just below the close of yesterday. That's it. And if we do drop down to 125 ADR, which is the monthly levels, that's it. But that's all I'm interested today. If it doesn't do anything else, I'm not going to touch it. I'm going to minimize it, and I'll come back and look at it later. See what happens. All right. Have a good day. I'll be back 2:20 this afternoon, 7:50 tomorrow morning for the Frankfurt session as usual. We'll see what impact the retail sales has had this afternoon. And we'll see if any of these moves have started to unravel. But I will be banking a little bit today on the pound moves, what profit I can get, and then deal with the rest after. All right, have a good day. Anything you need, let me know. I'll be in Telegram. Other than that, I'll be back this afternoon, 2:20, or tomorrow morning, 7:50. Have a good day.